Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah. With me is Meryl D'Souza, and this is a show where within under a minute, we're going to be taking you through some of the top buzzers in trade today. Before we do that, just putting the spotlight on what the market is up to right now. For the most part of the trading day, we've been absolutely range bound in a very tight range, and we continue to be that way because we're still struggling to once again regain that 24,250 mark, although we're very close to that. And it's absolutely flattish on the Nifty, flat on the Sensex as well. Nifty Bank is higher by about 0.3%, looking good over there. The India VIX today, however, has spiked up 4%, which is not a bad thing at all, because remember, India VIX slipping below 10 is an indicator of a bear market, and we had come as close to 10.7, 10.8 yesterday. So this 11.2 on the India VIX looking good. Nifty small cap is up 0.4%, while the mid cap continues to be absolutely flat. We're shifting focus to the primary market then. Integrated EPC player Lumino Industries is headed to the primary market with a 700 crore rupee IPO opening on the 27th of this month, with a price band between 78 and 82 rupees per share. My colleague Sajid caught up with Mr. Devendra Goyal, the managing director, to understand the company's business model and how it plans to deploy the IPO proceeds. Listen in.
We have two verticals. One is the product and the other is the EPC. So the revenue that we get, 70% of the revenue comes from the product and 30% of the revenue comes from the EPC. On the product side, we have two categories. The broader category, one is cables, the power cables that we talk about, and the other category is the aluminum conductor, which is used in overhead transmission line. So in power cables, right now we are making low voltage power cables that is up to 1.1 kV, which is aluminum and copper power cable, medium voltage covered conductor. We are making railway signaling cable, quad cable, and we are also making house wires, and we are UL 44 certified. So very few companies in India have this UL 44 certification for wires, which helps us to export our product to America. So this is on the cable side. On the conductor side, we make all kind of conductors which is used in overhead transmission line, right from conventional to the new gen conductor. New gen conductor means we are talking about HTLS conductor, which is high tension low sag conductor. So going forward, we foresee a lot of demand in HTLS conductor, which is high tension low sag conductor, and we have tied up with CTC Global, a company based out of America, who also has a manufacturing setup in India in Pune. They have a manufacturing facility in Pune. CTC Global per se, for the technology or the core that they provide to manufacture this conductor, their global share is approximately 95%, and India also in last 5-7 years their share has been almost like 95 to 97% in India. So we have tied up with them, and apart from that, there are 4 other manufacturers who are tied up with CTC Global, which is companies like APAR, GSK, Sterlite. They are also tied up with it, and I foresee a lot of demand happening in HTLS. Now, as a manufacturer of HTLS, we have already manufactured this conductor, we have supplied this conductor, we have installed it, and we have got the performance certificate. So in India, there are very few companies who have done the entire process right from R&D, development, manufacturing, installation, and getting the performance certificate. So this is what we have done. And so this is on the HTLS side. On the cable, I've already explained. The other vertical is the EPC, which is more like a forward integration for us, because the product that we manufacture, which is the cables and the conductors, 20% or 25% of our product is being used in our EPCs. So that helps us to get a stable market. That gives us a unique integration. That helps us in better supply management. So you would see, compared to our peer group, because of this unique integration, our CAGR, our EBITDA margins have been pretty strong and better than most of our peer group. So this is a unique blend and a unique advantage of Lumino.
Devendra, can you're raising 500 crores in primary issuance. Where is it going to be used for? And give us a sense of the kind of capex that you have lined up, because you're talking about some new ventures and new growth areas that you're focusing on. What kind of capex or capacity additions are you looking at there?
Correct. Yeah. So we are raising 500 crores from the primary sale, out of which 350 approximately would be used to repay debt. 15 crores would be used for revamping the existing manufacturing facility, and 150 crores would be used for general corporate purpose. And apart from that, in H2 of this financial year, we are coming up with a new manufacturing facility for cable. As I said, that right now we are making low voltage cable up to 1.1 kV grade, but very soon in this financial year, we'll start manufacturing cables from 3.3 kV to 66 kV. So that is a new manufacturing expansion that we are looking at.
Interesting.
So this facility is also there in Kolkata.
Can you also give us a sense of the kind of exposure that you have? Because your top 10 customers include mainly state undertakings and some of the central undertakings which are there. What kind of exposure do you have to state and central undertakings, and what is the kind of order book that you're sitting on?
Okay, so first I would like to talk about order book. The order book is approximately 3,000 odd crores, out of which 1,200 is on the product side and 1,800 crores is on the manufacturing side. And for the exposure on the clients, as you said, 8-10 clients, yes, we have a client mix. There are state discoms, there are private utilities. The product that we manufacture, 50-60% of the product we sell directly to B2B companies like Kalpataru, L&T, Jackson. So these are the companies that we are selling our products to.
Just to get a clarification, you spoke about the fact that the IPO proceeds will be used to pay off the debt. What would be the gross debt after you pay off all the debt?
The company would be literally debt free, kind of zero is what I would say.
And if you can also give us a sense of the kind of margins which you get, because you have two businesses, manufacturing and you have the EPC business which is there. What kind of margins are available for both these businesses? Because your blended margins are around 11 to 12%. So just wanted to understand where the margin kicker will be coming in from.
Yeah, so the blended margins is around 11.5%, and when it comes to manufacturing, the margins, EBITDA margins is around 11.5, and for the EPC it would be around 12 odd %. So blended is around 11.7.
Is there a conscious effort to increase the EBITDA margins for the EPC or increase your exposure to the EPC business?
No, the idea is that we would keep reducing our exposure on the EPC business, and I would keep increasing my efforts, revenues from the product, and that is what the idea is.
That was Lumino Industries, open for subscription on the 27th of August. But on that note, we'll slip into a very short break. Don't go anywhere. We'll bring you all of the latest stock-specific buzzers on the other side.
Back with Market Fatafat, and time now to put the spotlight on some of the top buzzers in trade. On the technicals, to make sense of some of the buzzing charts, we've got Mr. Akshay Bhagwat, Associate Director of Derivatives Research at JM Financial Services. But Akshay, hi, good afternoon. And before we come to you, let's put the spotlight on Wellspun Corp, a company or a stock that's doing really well in trade after securing its largest ever order worth 17,200 crore rupees or $1.8 billion for pipe supplies from its US facility. The order will be executed over FY28 to 29, taking its global order book to a record $4.4 billion with a 2.4 times book-to-bill ratio. The management sees strong demand for gas evacuation infrastructure, particularly in the US, and is working on more similar orders, and they also see scope for capacity debottlenecking, with a large part of the current order book coming from the US. This stock is up 13.5%, but even other than this, all other Wellspun Group companies are doing well, like Wellspun Enterprises, Wellspun Specialty Solutions, Wellspun Investment. All of the Wellspun Group companies are doing well, but it's Wellspun Corp that's leading from the front, a 13.5% uptick as we speak. But shifting focus then, let's also talk about HDFC Life. Actually, that's the chart that you've picked out for us, and I'm just trying to pull out the chart move that we've seen for HDFC Life. In the last 6 months, the stock is low by 26%. Given the steep correction that we've seen, are you seeing a reversal anytime soon?
Firstly, good afternoon to all. Yes, I'm expecting a reversal in HDFC Life. In the last couple of months, the stock has been in a downtrend, but recently it has tested one of its key technical support levels, which is around 540. And we have also seen the stock reversing from the supports on oversold technical parameters. So I'm expecting this reversal to go to take the stock all the way up till 570 to 580 on the shorter term frame of charts. And on this buy position, you can maintain a stop loss below 530.
Okay, that's the word coming in on HDFC Life. But another stock firmly in focus today is Seagal India after the company has received a letter of award from the Himachal Pradesh State Industrial Development Corporation. This is an award for 225 crore development of the bulk drug park at Una, Himachal Pradesh. And the project involves formation, cutting, construction of internal roads, storm water drains, and a bridge and fencing as a part of a PH1 of the development. Now, the order is awarded as an item rate contract and has an execution period of 18 months. On the back of that, we've seen strong up moves in Seagal India today.
Okay, that's the move coming in on Seagal India, but JBM Auto is buzzing today because reports say that Bain Capital is in talks to invest as much as 2,850 crore rupees in JBM's EV manufacturing business, potentially taking joint control. The discussions also involve creating an omnibus holding company for JBM Group's EV businesses, into which Bain could invest. That's what the report suggests. The potential deal could bring significant capital and a strategic investor into JBM's broader EV ecosystem. On the back of this report, the stock is higher by about 6.75% as we speak. But then let's keep it going. And Akshay, yet another Nifty stock is something that you've picked out for us, and that's Reliance, and looking very interesting on the charts because last 6 months the stock is lower by 8%. Last 1 year, similar moves, it's not done much. And in fact, YTD, we're seeing a 17% fall on the stock. What's next on the charts for Reliance?
So Reliance has been range bound since the last 3 months, but I believe it's time that this range breaks on the upside. That's what the technical price volume action tells us. There is important resistance at 1340 zone, and I believe soon this breakout is happening in the Reliance above 1340, post which we can see the stock moving up for potential targets of 1380 to 1400 in the month of September. So right now you can consider buying it a pre-breakout strategy with a strict stop loss below 1275.
Got that? So 1380 to 1400 marked as a target for Reliance. But another stock in focus is Satwik Green. The company's subsidiary has secured a 190 crore order from one renowned independent power producer or EPC player. This is for the supply of solar PV modules, and this order will be executed by the March 2027. Now, on the back of this and more news flow, the stock has been up almost 20% this week itself. This follows the announcement that the company made on Monday, signing an MOU with the Industrial Promotion and Investment Corporation of Odisha, setting up for a 3.6 gigawatt solar manufacturing facility. Even today, we're seeing strong up moves in Satwik Green, up almost 4% today.
Okay, that's the kind of move that we're seeing on Satwik Green. But let's talk about sugar stocks. You know, the entire trend that we were seeing in the last 2 days, very solid gains on sugar stocks, has today reversed. And sugar stocks are seeing some bitter cuts after surging for 2 days as the government has approved duty-free imports of 1 million tons of sugar until the 31st of October. The move aims to boost domestic availability ahead of the festive season and contain rising sugar prices, while exports remain prohibited until the 30th of September this year. So it's names like Balrampur Chini, Triveni Engineering. Take a look at the cut on Balrampur. It's 7.5% lower. Triveni, Dalmia Sugar, all of them seeing cuts. Dhampur, Dwarikesh, Sri Renuka Sugar, EID Perry, some of them are seeing very massive cuts. Dwarikesh lower by 6%, and Sri Renuka, Balrampur, they were doing excellently well in trade yesterday. All of them seeing a reversal. Awadh Sugar still managing to hold on in the green, and that's the reason why sugar stocks are under pressure today. But Federal Bank, then, that's a stock that Akshay has picked out from the private banking space. Akshay, today, you know, in fact, we've had a Goldman Sachs note that they've initiated coverage on a bunch of stocks, including Federal Bank. What would your outlook and target price be on the technicals?
So yes, if you look at the entire banking pack, it is the small and the mid-cap banking space, which by and large has seen a strong momentum upsurge in the last couple of months. And talking specifically about Federal Bank, we had a very significant chunk of move happening in the prior couple of months in the month of June and July. August has been more of a momentum loss, but the broader technical trend stays strong. I believe the momentum should regain again in Federal Bank for possible upside still 380 to 390 on the shorter term time frame. And any buy positions should have a stop loss below 345 for targets around 380 to 400.
Okay, that's the word coming in on Federal Bank. Another stock heavily in focus on the back of an order win again is Data Patterns. That company has received a 585 crore order coming in from Bharat Electronics. Now, this order brings the company's overall order book at rupees 2,679 for the year FY27, and this BEL order alone amounts for almost 22% of the company's total order book. While new orders in general, which the company's received post the 30th of July, make up for almost 771 crores, that's almost 28% of the total order book. So we're seeing steady order inflows coming in on Data Patterns, with a lot of them being new orders, bringing in very strong revenue growth and as well as revenue outlook for the company for the year FY27 itself. That stock is also doing pretty well, upwards of 4% today.
Okay, that's the kind of move that we're seeing over there. Let's talk about Urban Company. UBS has initiated a buy rating on the stock with a target price of 180 rupees, implying a 22% upside. They believe Urban Company is India's largest online home service platform with 8.4 million users, and it could see net transaction value, that's the NTV, growing from 43 billion in FY26 at a 32% CAGR to 100 billion rupees by FY29. They say that India's online home services market is entering its Blinkit moment. Urban Company is at the forefront of this evolution, and they say that despite competition from Snabit and Pronto, Urban Company has a head start in this segment. Right product market fit, strong balance sheet, execution track record with a clear focus on unit economics are some of the positives that UBS is liking. On the back of that, they've initiated a buy rating on Urban Company. They believe the company can comfortably achieve its target of 10 billion rupees adjusted EBITDA by FY31. All in all, positive note, and a 7% uptick is what we're seeing on that stock. But Kotak Mahindra Bank, Akshay, you seem to be liking the Nifty pack as well as banks. Give us your sense on how you are looking at Kotak Mahindra Bank, and do you believe it's better placed on the charts compared to its larger private peers like HDFC Bank and ICICI, for example?
Absolutely. So banking is one space which I believe there can be strong round of momentum in the month of September. And Kotak Mahindra Bank till now has been a laggard in terms of its price performance action over its peers, specifically ICICI or Axis Bank, to name it. I believe right now, the way the last few days of momentum action is catching up in Kotak Mahindra Bank, this stock can move up for potentially up targets of 430 to 440 in the month of September. So buy positions should be created at current market price with a stop loss below 385.
Okay, that's the take coming in on Kotak Mahindra Bank. But on that note, I'm afraid we're completely timed out on this edition of Market Fatafat. Akshay, thank you so much for your time. And with that, viewers, thanks so much for tuning in. Keep watching ET Now, because Closing Trades is going to be taking you through the last leg of the trading day and the week.